Welcome back to Morning Markets on Tuesday, the 13th of April. George Bell here, investment analyst, to bring you up to date on the key market moves over the last 24 hours. Looking first at equity markets, a modest retreat after last week's strong gains as investors anticipate some of the key data points due in the coming days, including inflation prints and earnings. Here in the UK, the FTSE 100 was down 0.39%, similar levels across the market cap spectrum, with the FTSE 250 down 0.44% and small cap around 0.41% on the day. Banking and mining stocks, some of the more challenged sectors on the day there. In Europe, the Euro Stoxx 50 was down 0.43% despite the publication of stronger retail sales for February, so up 3% month on month, ahead of expectations of 1.5%. You've got tighter activity restrictions which are being discussed on a regional basis. In the US, the S&P 500 was down 0.02% on the day, the Nasdaq down around 0.36%, and the Russell 2000 down 0.43% on the day. In terms of data points, the earnings season, which begins this week, will be an important indicator to the health and the forecasts of business in the US. Overnight in Asia, markets were initially supported by the strong export data from China for the month of March. Another sign of the global economic recovery, which we are seeing pull through. Exports were up 30.6% in March from 1 year earlier, slightly lower than the Bloomberg expectations of a 38% increase, but demonstrating a recovery from 1 year earlier when activity restrictions were much tighter in China. Whilst the growth rate in exports was strong, the growth rate in imports was stronger, up 38.1%. So that was beating expectations and leaving a trade surplus, so the difference between exports and imports, of around 13.8 billion for the month. So that was slightly lower than anticipated, given that import growth. Anticipated levels were around $52 billion. By close of business, markets were slightly mixed. In China, you had indices such as the CSI 300 and the Shanghai Composite down around 26 and 52 basis points in sterling terms. Part of the wash through in China can be explained by the focus on Chinese debt providers today and a number of scenario tests which were published simulating the impact of more challenged scenarios. Debt levels being a key focus of Chinese authorities under their three red lines policy. In Japan, a more positive response. The Nikkei 225 was up around 0.2%, supported by the trade data, but also a weaker yen. Also a positive start to their earnings season, which we'll continue to keep you up to date with. Across the bond markets, moderated moves on the day. Yield on UK 10 and 30-year government bonds or gilts were up 1.7 basis points and 0.6 basis points to a level of 0.79%. and 1.31%. In the US, across the same maturity profiles of 10 and 30 year, we had moves of around 0.7 basis points and 0.4 basis points, taking yields to 1.67% and 2.33%. Yesterday, we had a series of treasury auctions in the US, being 3 and 10-year notes. The fact that we didn't see a big push out in yields like we did back in February with the issuance of 7-year bonds suggests that there was a bit more appetite for these bonds. The Treasury were able to successfully auction off $58 billion worth of 3-year notes and $38 billion worth of 10-year notes. Today we've got auctions for bonds with 30 years to maturity, where the Treasury hopes to auction off around $24 billion worth of bonds into the market. Inflation expectations were less forthcoming on the day, with reference here to the 10-year UK break-even rate at 3.5%, up 0.01% on the day from a level of 3.49%, but slightly moderated from 1 week earlier where break-evens were around 3.55%. In the US, 10-year break-evens are sitting at a level of around 2.34%. The 2-year break-even level is slightly higher at 2.68%. That's really just demonstrating the anticipation of a near-term uplift in inflation. Yesterday, Chris highlighted the producer prices data for the US, which was up 1% in March. Fed Chairman Jay Powell spoke again at the weekend to CBS to try and ease inflation concerns. We'll get a better picture of inflation data for March coming out today. US dollar was trading slightly weaker on the day on a trade-weighted basis, with the Dixie index down 0.06%, continuing the trend of US dollar weakness which we've seen come through month to date. We're seeing a similar picture with sterling on a trade-weighted basis. In terms of rates, you've got cables, so sterling against the dollar at around 1.37 and sterling against the euro at 1.15. Commodity markets, energy prices were slightly stronger on the day. Brent crude was up 0.37 to $63.2 per barrel. However, commodity indices were pulled back by a slight pullback in the industrial metal prices, notably silver, off around 1.7% on the day. Thank you for watching. We look forward to bringing you up to date tomorrow.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.